All right, welcome back to Cruising on Crypto. I have Greg, also known as Bludex Online, back on the channel. We're going to talk about this market, which, as you can see, I put the red light on behind me because it's been a nasty day. If you weren't aware, the Federal Reserve came out and they did their report saying that they're expecting, inflation is clearly a problem, and they're expecting to cut back on quantitative easing. In essence, they're money printing much sooner than they originally planned, and that just killed the stock market. And of course, the crypto market went along for the ride as well. And as I've said in previous episodes, these Rebase DAOs on the spectrum of most safe to most risky, they're on the most risky side of the scale. So most risky gets hit a lot harder in a downward market than a bullish upward market, which we haven't had for a few weeks. So the Rebase DAOs have really taken a pounding. But I want to get your take on this, Greg. And also, I know you've come out with a new Medium article today talking about your top 15 Rebase, and we're going to go into some other things as well. So why don't you take it away? And thanks for being on the channel again.
Yeah, no problem. Yeah, I know that's really crazy with the Federal Reserve today. I definitely don't envy them, right? They're stuck between a rock and a hard place because, you're damned if you do, you're damned if you don't. Because if they let inflation run wild, that's going to really, really harm, the middle class and lower class, and it could eventually spark like a revolution or civil war like it has in the past, right? So it could be a big, big problem. But at the same time, the more they tighten, the more it's going to crash assets like we're seeing today, which could cause a recession, right? So, it's just really, really rough, but, with the money supply, how it's got to where it is now, and all the leverage in the system, all the cheap money in the system, it's definitely, it could be bumpy for a while. I'm thinking 2022 is going to be a very volatile year.
I agree. I've been saying for a while in my Telegram channel there that I kind of assumed the Fed would keep kicking the can down the road. I've been saying for a while that at some point the inflation is going to be so blatantly obvious to Joe average public that they're going to demand, and the Democratic Party will demand against the Federal Reserve to let's rein in this inflation. And the really only way they can do that is to raise interest rates, obviously slow down this quantitative easing, stop money printing. And I thought they might be able to push it, kick the can down the road until maybe the end of 2022. But today was kind of a wake-up call that they're now on record saying we know it's a problem and we have to act faster than we originally were forecasting in our previous report. I think they said they're going to completely knock out their bond purchases by mid-March, which is way ahead of schedule.
Maybe even raise interest rates then too.
Yeah, they were talking about raising, maybe earliest estimate was June, and now they're saying March.
Exactly. Yeah.
Yeah. So I've been saying to my group that, you know what, if this day of reckoning comes, the stock market's going to, which has been in bubble-licious territory for a while, it's going to go down hard. And when it does, it's not like the crypto market's going to be immune to it. So just be aware. But when people would ask me, well, how long do you think that's going to be? I said, well, if we go by the previous playbook of the Fed, they've always found a way to kick the can further down the road, not really deal with the reality of situations. But today was the first time they admitted, we got a problem with inflation and we got to do something about it. So,
I think the main lesson here is don't play around with leverage.
Yes.
Unless you're very sophisticated, because this is going to create because the more leverage, the more cascading effects, the more contagion and such like that. And so whether it's equities or crypto, leverage is a very dangerous thing. And so you're right, but at the same time, there's already been a lot of money printed, a lot of money flowing in the system. So it's in terms of how low can it go, how much can it crash? I mean, it's anybody's guess, but we can go ahead and get started. Take a look at this. Is a shot as of around 6 p.m. on Wednesday, January 5th. So we could see right here, in 24 hours, Bitcoin down 6%, Solana down almost 10%. I think I saw Luna's down like 10%. So those are some pretty big pullbacks. Ethereum 7.5%. They're already trading at pretty, somewhat discounted values. I would say, they've been, they actually haven't been this low since, if you remember, September was kind of crappy, and then October hit, everything started skyrocketing. We're basically back to the end of September with where these things are right now, which is kind of crazy to think about that. All of the fall and winter basically since then has almost been wiped off it, but. What do they say? It's about time in the market, not timing the market, right? Yeah. So it's got to hold tight and always keep some dry powder on the side.
Yeah, exactly.
thanks again for having me, Craig. I figure I just released a new article just a few hours ago. Of course, things have changed a little bit since then, but with the market conditions, because this was before the Fed meeting today. Before I begin, we'll give a normal disclaimer, right? Nothing in here is financial advice. This is all just entertainment. These things are really, really risky assets, and we don't pretend to know absolutely everything. We are just analyzing the best we can with what we know, and see what happens. So
yeah, we can't foresee things like what the Fed said today publicly.
Right.
I mean, we were talking off camera earlier today before the Fed came out. And we were talking about how TIME Wonderland has come down quite a bit. It's in kind of a maybe a good buy opportunity, and then this comes out and slams the price even further down. So yeah. I bought some more time yesterday, I believe. Yeah. So you think, okay, things have gotten pretty bad in the last couple of weeks. This is look at how low the price is. It hasn't been this low in a long time. You buy in, and then this comes out. And you realize I should have waited.
You're never going to be able to time the bottom, right? I think the important thing, that at least what works for me, right? DCA more in as it goes down, DCA out as it gets goes way up, right? If you do that, generally you'll do okay.
Fine,
right?
in the long run, yeah.
It's right. You're not gonna ever time the top or time the bottom. It's really it's possible to do that, but if you DCA correctly, you can do pretty decently. So
that's what we're hoping anyway.
Yeah,
that's what my portfolio is hoping about. Lot time in the market.
I know.
Right?
Yeah. Who knows? Yeah, exactly. Who knows how far down it could go from here?
Yeah.
It's anybody's guess. Or it could just all bounce right back tomorrow. Who knows?
A funny point. I talked about this earlier in my group, but I don't know if you read that. Spartacus of all. How we were talking about it's below its risk-free value. And it kind of goes to show you when it gets down that low, even on a terrible day like this, when everything's getting pounded, and you were showing the cryptos, you were showing the top cryptos. The Rebase things went down even more than those kind of top 10 cryptos, right? So
probably, I could bring that up real quick here. So if we look at, we'll say the last 24 hours.
Are these just the DAOs? Okay, yeah.
These are just the DAOs here.
Not too bad,
so they're the worst ones.
The Spartacus
here,
is up, which is weird, eh? On a terrible day.
Spartacus is up. Yeah. Actually, look at it. It just went up. Wow, 6% in the last hour. Actually went up very strong. And you know what? I think that's actually really interesting. And I mentioned this in the last video, right? When you were talking about how things work in a bear market. Spartacus has a lot of stable coins in it, right? Mm-hmm. It is virtually entirely stable coin, and it's trading well below its risk-free value. So this is actually a very, very safe play in a volatile market almost, because they're so cheap. They have a decent yield, way better yield than you get at any bank. And the assets they have are not very volatile. So maybe this is something we're almost seeing kind of play out here. Again, anything could be contributing to this, right? I'm not looking at it.
Well, I think it's a run to safety. And like you say, the Spartacus play is almost like you're buying stable coins at below the cost. Right. So when we have a terrible market like this, like Hector DAO, look at it's way down, Euphoria way down. But Spartacus, if you're going to be in the DAO space, the Rebase DAO space, you're like, well, where can I go where I don't think it can fall? Well, Spartacus below risk-free value. You're like, okay, well, this really can't. So almost like you've got a safety net underneath you, and like you said, it's still paying 300% APY. So that's way miles above what you can get in a normal investment outside of crypto. So you go, if it's below stable coin price and you're getting 300%. Even if it does drop, it's still going to be way above what a bank will pay you, right? So,
right. Again, though, those APYs, they do cancel out over time, right, from the sell pressure. So it's really about how far away it is, in my opinion, anyway. How far away it is from that Treasury backing value, right? And it helps cement that floor a bit more. Right. So, but this whole market, right? I mean, this is not a lot of people do this, right? I mean, this is a really, really advanced thing. And the people that invest in these Rebase tokens don't always do what the whole market is doing, right? Like there's a lot of sophisticated investors in Bitcoin and Ethereum. There aren't many in this place. So in Rebase tokens. So I don't know if I would always say that these would track so closely. Of course, a lot of people will be completely risk off and sell everything, right? But, sometimes these things, they do what you least expect them to do. Yeah. So
I just find that these are, because they are considered kind of high risk, high return, that when people get nervous, like they have been in the last couple of weeks where the market's kind of going sideways to slightly down, these sort of go noticeably down, not sideways. And yet, if we had a raging bull market, if we all of a sudden Bitcoin in a month went up to over 100,000 and everybody was euphoric, chances are a lot more money would come into these. And then these prices would go up a lot more than, let's say, a Bitcoin would. So
potentially, my thesis is that it all depends on the Treasury. It is so much entirely dependent on the Treasury and where that market cap is in relation to the Treasury. I've been saying that for a while, and I really think that is like the real, very, very key metric. There's lots of things that go into it. Risk, what are the devs doing to innovate, the features they offer. APY plays a part, but it eventually gets balanced out, with the sell pressure it causes, so that it's almost a net, right? So, but anyway, I read
your article earlier today, and it has a lot of great topics. So why don't we just go through it in order of how you typed it? Yeah.
Yeah, sounds good. So I won't read it word for word, but I made a few predictions for 2022. Everyone's doing these, prediction threads. I think everyone's sick of them. And of course, no one knows what's going to happen, right? You can look at 2021 and no one was going to call, Bored Ape Yacht Club and everything that exploded as much as it did in 2021. Yeah. So not going to be able to call it one way or another, but I think it's fun to make some predictions. So one thing I'm thinking that's going to happen, we kind of already see happening, is that these Rebase tokens, I think people are almost kind of getting sick of them a little bit, right? There's so many new ones coming out day in, day out. There's been so many Rugpulls. People get cautious. These things get inflated like crazy. Now that people have seen how these things play out in their first couple of weeks, they're a little more shy to go all in because of how volatile they can be. We've seen a lot of those high APY projects, just completely crash in price. A lot of people kind of get wrecked there. So, I think we'll still see a lot of these, but I think we're going to see the same story where they won't be able to get up to a really strong treasury, that they'll build a decent treasury in the first few days, maybe the first week, and then they'll inflate it. They'll fall below their risk-free value. They're not going to do any minting or bonding, and people are just going to move on to the next project. So I think we'll see a lot of that, but at the same time, there'll always be decent value plays out there as well. So
yeah, I think there's only so much money for this space, right? And so if there's so many constantly coming out and everybody's jumping into one and riding it for 2 weeks and jumping out, it's unfortunate. And like you mentioned in your article, the ones that are going to do well or over the longer period are ones that are going to do inventive things with their treasuries.
Exactly.
They're not just going to go in stable coin and say, oh, look, we have $1 million or $10 million in stable coins, invest in us, right? So
right. And not just doing, really good treasury strategy, but also other things outside the treasury too, whether it's like a gamification of, like we're seeing with Rome DAO, right? It's getting very popular right now. Those things will absolutely put another spin on things to make it more enticing, more fun, and potentially better investment. So I would, people ask me all the time, "Well, cover this DAO, cover this DAO, cover this one," and I'm like, look, like here's my list. These guys have been around a while, so I feel safe with them. I'm happy to knock one of them out, but you got to really wow me with one. If you show me a DAO that's like doing something that no one's ever done before, and the team's KYC, so I feel a little more comfortable that it's not too risky, then I'll take a look at it and we'll see, and maybe it'll swap with some of the ones on here. But like I really need to see something like very, very new and innovative, and high market cap too as well helps a lot too, because it proves that it's a it's getting a lot of hype. All right, so that was one prediction. Another one is I think we'll see a lot more projects do the Giza DAO route, right? Where they're just like, what, we can't deal with this market. We've been trading under our risk-free value forever. We're not making any money from the bonding anymore. So like, this is too stressful. We're done. And we'll just airdrop the treasury and wrap up. And I think we're going to see this more and more. And I think it's I feel bad for the projects that don't succeed. I think that if this is the standard, then we can see that it'll help create those solid floors on a lot of these projects, because people will they might just airdrop their treasury and close, so I don't want to miss that. I think it's going to be a good thing for this space overall.
Yeah, we were doing the back of the envelope math on Spartacus yesterday. We were talking, and we said if Spartacus did a Giza, everybody who owns a Spartacus would double their money, because there's just so much treasury just sitting there, and the price is trading below it. That anyway, so that's why maybe Spartacus got a bit of a pop today, because people are finally realizing, like They've got stable coins. They've got a big treasury. They were
Yeah,
one of the
there's also-
earlier ones to get into it too. So they've been around for a while. So
Yeah, all those fandom ones got in like the same week, right?
Yeah.
So like Hector, Spartacus, Exodia, Phantom, they all launched in like the same week, like right in the beginning of October, like right in October, I think. So, but yeah, exactly. No, I agree for sure. You can it might even be more than double. It might even be like 2.5 times.
Yeah.
Like that's how much of a discount it's trading at. So,
but it goes hand in hand with your point 3 that if people start to feel like if a project's going to close, they'll probably just airdrop everybody the treasury value. Then this whole saying it's backed by $1 is kind of just, it's actually not helpful, right? You talked about that in point 3.
Yeah, so that that's part of it, right? Because a lot of these are run by anonymous individuals, right? So like they might not go the high road and might just say forget it, we'll take the treasury, and we'll wash it in tornado cash and say goodbye. And that's why KYC on a lot of these things is so important where they have them, So
yeah.
But yeah, one big thing I want to talk about is, I always do a lot of analysis, a lot of math in this space, right? Because trying to time these things, right? What's a good entry level, and what happens in the worst case scenarios, right? Mm-hmm. So when I ran some models, and I know I shared that with you, I'm not gonna show a spreadsheet here today, but basically, if you look at all the current supply, you run the runway out to the end on these tokens at the current yield, right? See what the total supply is after that, and see if there is $1 in the treasury for each of those things. And when you do the math, there is not, right, in almost any of these projects. So, I really think this $1 backing, like this, that can't go below that. I think that's a meme, basically. Mm-hmm. And, and I don't even think that it's necessary, right? Like you were saying, if these things are trading for $100 a token, like who cares if it can't go below $1? If I'm losing 99% of my money, then might as well lose 100% of it.
Yeah.
So I think that it's almost dangerous too to do this, right? Because it makes people too shy to invest their treasury. So there'll be tons and tons of stable coins in there, and they're not going to, they'll just get inflated away, and it just won't be that interesting of a project, right? Mm-hmm. And so, but they'll be scared because they feel like they got to try and maintain as much backing as they can. They don't want to invest in risky assets. Whereas I think these things are supposed to be kind of investments, right? They're supposed to be things that should grow over time, and or else, what's the point of them?
Yeah, and like you said, so many of these, like TIME Wonderland we talked about, I mean, it's trading even today at what we consider bargain basement prices. It's like $2,500. So
right.
Somebody saying that in the code it says that it's guaranteed to be worth at least $1.
Right,
that doesn't give me any comfort at all. So they might as well just stop saying that. It doesn't even.
I agree. Yeah, I think we just need to get rid of that. Just say it's not backed by anything. There's a treasury. It's going to trade at a ratio to that treasury, and it's up to the market to decide what it's worth. And that's exactly how it works in the stock market and everything. And just that this should not be a reserve of stable coins. These should be marketed, and they should be invested in things that can grow, and they should really be kind of like, hedge funds or not, or unless they're really trying to be kind of the safety bear market asset, like we were just talking about, where it's just, just stable coins. There'll be a little bit of a yield in here, and if it trades cheap, then it could be a safe one in a bear market. But I think that a lot of these, they should really follow in the footsteps of Wonderland, Squid, Redacted Cartel, Olympus DAO, get more exposure to things other than stable coins.
Right.
All right. So another prediction here, this is a real interesting one, is if you're following the curve wars at all, right? And there's a lot of talk, in terms of what regulation that can we see in 2022. Of course, the government's going to move really slow on these things. But one thing that could happen somewhat soon is a ruling on stable coins, right? And who knows what direction that's going to go in. I hope it's favorable. I feel more like it's going to be more favorable than not favorable. But having these decentralized stable coins, either algorithmic or backed by collateral in the system, I think is good because they really can't be regulated. So, and right now, there's these huge battles going on, right? So the top 3 decentralized stable coins would be DAI from MakerDAO. Then there's Terra Luna's UST, and then there is the Magic Internet Money token from Abracadabra.money, right? So those are the 3 big decentralized stable coins, and they're kind of like these curve wars, somewhat going on right now to really, really increase the liquidity and vote to where the rewards for the pools will go, so that these could really be like the cross-chain reserve dollars. And I think cross-chain is really key. Back in the day in DeFi and everything, it was like Ethereum or nothing. But now that Ethereum's gas fees, we have all these other EVM compatible chains, even things like Solana and Terra Luna. There's so many more options now with lower fees. So DeFi can be anywhere and everywhere, and I think that's where it's going to go, where it should go. And I think we're going to see like the results of a lot of that right now. We're going to see a lot of these applications, like already, Sushi Swap is usable across so many different chains, right? And we're going to see more, and that these treasuries are going to start doing that too, right? And they already are,
right?
I think one of my big predictions here is that I really believe that the minds behind Wonderland Money, with all their other applications, with Abracadabra.money, Popsicle Finance, potentially Sushi Swap, that they're really going to kind of take over here. Like they kind of have, they're innovating fast. They have definitely innovated faster than MakerDAO, and the meme token is getting very, very pervasive throughout the ecosystem. So all I'm saying is, I don't know where it's going to go. It's going to be volatile, but I would not bet against this force, because they clearly have some of the most talented developers and brains that understand DeFi. And I think there's going to be a lot of surprises, and they put their money where their mouth is too.
Yeah.
So another thing, predicting the rugpulls and hacks, they're going to get more and more sophisticated as more and more money enters the space. I think it's just just when you thought it was a total safe thing, safe pre-sale, docs, devs, and everything, like it's going to get trickier and trickier, and you will get the rug pulled out from under you, like in ways you didn't thought were possible or have never been done before. So, I know everyone wants to try and find like their big 10x's, 100x's and everything, and get in real early and everything, because it's worked for them before. But I'm telling you, like my strategy is wait for things to be out for a couple of weeks, let everything settle, and then see where the value plays are.
Yeah,
so,
I agree. Yeah, I haven't done much in the way of getting in on the white lists on these unknown projects, especially no KYC, nothing, just a name and a website, and you can get on the wait list, and we give you a discounted price for the coin. I've seen too many of my friends get rugged because you don't know these people from Adam. It doesn't take much to set up a website. So
exactly, yeah. So it is still the Wild West, unfortunately. So another thing I think we're just talking about at the beginning, right, is the volatility, and here we are, right, with the Fed today. I think that as more and more sophisticated investors get into this space, it's going to make a lot of the leverage in the system worse, right, because they're experienced with it. So I think that. And then whales are going to manipulate all the time. It's never going to stop, right? People are going to gamble. People are going to, invest in the perpetuals and lever up, and they're going to try and play real short things, and like do 10x leverage and be in for an hour or something like that, and then jump out. All these people are basically gambling, and as the markets crash down, it basically flags all these other leverage positions as being potential to be liquidated too. And so then you need less money to liquidate them. It's a vicious cycle. And of course, we also have almost definitely in 2022, we're going to have the merge, right, for Ethereum 2.0. And that there's going to be a ton of ETH that's been locked for a while now.
It finally comes available.
Market. Yeah. Right, exactly. Yeah. So I have to imagine that there will be people taking some gains from that, because if you locked it in right when the beacon chain became available, I don't know what it is exactly, but I think you made at least 7x your money, right? Assuming ETH just stays where it's at between now and then, it could go up. So definitely, I definitely predict a lot of volatility this year. But I do think, I actually do think it's going to be a positive year overall. A lot of people are saying, the bear market's coming, we're going to have this blow up top, it's going to go down, we're going to be this horrible bear market, and it's definitely an option, but I would be very, very surprised if things like Bitcoin, Ethereum, and stuff were lower than they were today 1 year from now. It would really shock me.
Yeah.
So, but we'll see. We never know.
Yeah, exactly.
And the last one I have here is NFT gaming, GameFi, metaverse stuff. Like I know that's been super hyped up and everything with Facebook rebranding to Meta. But I think it's going to work, and I think that there's going to be a lot of very, very interesting plays here. And I've had by far the most success in this space versus anything else, and whether it's DeFi or investing coins or anything. And I think that this is it. Even in bear markets, that the fun games will perform well, right? Gamers gonna game, and they're not gonna care about the market, right? So
especially even during a bear market, if you can get into something that's not only fun to play, but you can play to earn, where you can play and actually make money. Because people in the past were playing all these games, on their Xbox or whatever for hundreds of hours and not making, if anything, costing themselves money because they'd be buying skins for their character or whatever. So it was a money losing game, and people would still play for thousands of hours. Now, can you imagine if it's a fun game? I noticed you mentioned Star Atlas on there. That looks like a great option. I've dabbled in that a bit. And if it's a AAA game, but you also have the ability to make money because of NFTs you collect and stuff that you can sell in the open market, I mean, then it's even more reward to keep people playing, right? Because it's not only enjoyable, but if you can actually come away with some money at the end of the day, you're like, well, hey, it wasn't a complete waste of my time, right? Like most games are. So it's going to be a big area.
Totally agree. My number one investment since the middle of last year has been Crypto Raiders, which has been totally gone crazy over the past week. And they are making the game started out very, very simple, but like they're moving the ball along week to week to week. They have lots of airdrops. They have lots of NFTs that, you can see them developing. You can see the things they're working on. And like, they're not just sitting there, right? Well, some of these other games, they're having these pre-sales and doing these things, but you don't actually see any playable game at all yet. And people are just kind of waiting there. And I think that, as long as these games are fun, that they're going to do well. But a lot of the hype in some of these games right now. Another thing to be careful of, a lot of these games have tokens already. Incredibly inflationary. And it is so important. Like tokenomics with these games is so important to assess and look at what those lock and unlock schedules are and such, because these can be extremely dangerous things to invest in, because some of these things only have like 1, 2, 3, 4% of their total coins available right now. That's just like with these Rebase tokens, right? Like if 94%, 95% of the tokens are going to get unleashed into the market and sold, that is going to crush everyone who bought it. So look for the ones that have as kind of as fair of a launch as possible, with the community, really, really large portions of tokens assigned to the community, and not to like VC insiders, advisors, and stuff like that. So so they're still very risky, and the games that are not fun, like a lot of games right now that people are investing in that don't have much of a working game yet, if those games don't turn out being good, like those tokens will crash hard. So.
Because like you say, they're minting so many coins anyway. So, and then on top of it, if the demand just dries up, then you're in trouble for sure if you're an owner of that. One of the games that I know, one of the Rebase DAOs that right from get-go was talking about with gamification was Rome, and it's the one. Well, it's on the bottom of your list, but I think that's mostly based on market cap to risk-free value. It loses a lot of points there. But I've been reading their Medium articles, and they've got a very detailed game structure, which is pretty cool. Because a lot of these other Rebase DAOs, when you look at their Medium articles about what their future plans are, they always refer to, we're going to do NFT airdrops, and we've got a game in mind. But no explanation of what this game is or if it's going to be any good or not. I think a lot of times that is just buzzwords that some of these projects want to throw out there just to keep people hyped on the project. We're gonna give you NFTs, and we're gonna have a game where you're gonna be able to play a game within our DeFi project. But at least Rome was designed from the ground up to be a game, and if you read their Medium articles, it seems very well thought out, which is kind of interesting. So, but anyways, I'll go on to your list.
Yeah, and we can just start with that one. So it does seem very interesting, and I feel bad. Like it's on near the it's at the bottom of my top list, and it's not because like I think it's bad, right? I mean, there's like 100 of these tokens out there, right? So it's in the top 15 from what I can tell. But the thing is that I just deem there to be a lot of risk, right? There's not a lot of released features yet. We don't know how they're going to play out. The valuation ratio is totally insane, right? Like these numbers as are of 10 a.m. on Wednesday, right? Which is 8 hours before we're recording this. This it has almost 6 times the market cap higher than a treasury value, right? So that is quite a huge multiplier.
Yeah.
And but maybe there's good reason for it. I know that it has like this vested staking type thing you could do with it, right? So that takes a lot out of the market. And that there's potential for the gamification elements where you might get airdrop things that have value that make up for the difference between the treasury and the market cap. I just don't know it yet. I haven't seen it. Yeah. So I can't tell their runway, right, very easily from their dashboards. So I just need a little more time, and again, maybe someone can educate me a bit more on it. And,
well, the first campaign doesn't even start till I think January 15th. That's the very first one. I think there's going to be a campaign for 3 months, and within the 3 months, every month, they're going to kind of tabulate how you scored so far and give you airdrops and stuff. So in essence, there's like 3 games within a 1 campaign, 3-month campaign. So I think for you, who wants to kind of like, let's see how the dust settles, it would be probably easier to evaluate its qualities and its numbers, that you're very spreadsheet oriented. Once you see one campaign actually run to fruition, because then people will be able to report back, what NFTs did I get? When I got the NFTs, when I went to the marketplace, were they even worth anything? I mean, if they're just going to airdrop everybody a gajillion NFTs, and you go to marketplace and it's worth 3 cents, then you're like, what was the point of playing this game, right? But the NFTs are the unknown. What are they going to be worth, right? So.
Yeah, exactly. Yeah, I always got to be cautious of those things. I aped into one called wasn't really treasury-based protocol, but one called Wizards and Dragons. It was like a highly inflationary kind of NFT game on Ethereum, and I didn't do that well on that. It kind of sputtered out real quick. Yeah. But that's the thing, and inflation on these things is totally real, and I don't know what their plan is and how they distribute the tokens and how fast they do it. The current APY is over 105% here.
105,000%.
105,000. Sorry, 105,000. My bad. Yeah. And that's another thing like I want to bring attention to, right? So many people like they put so much pressure on the APY, right, as being so huge. But the thing is, these things never run with these APYs for like a full year generally. If you actually look at what the next reward yield is on a lot of these things, and that's what these APYs are calculated from, a lot of these are ranging in like the 0.5 to 0.6 something % range, which is not a huge difference between each other. But when you look at the actual APY of them, sorry, it's just getting cut off a little bit. It's really like
makes a huge difference.
Massive, huge difference.
Like a 0.02 makes a huge difference in the yearly APY because of the compounding. And these things are compounding usually every 8 hours. So you're getting rewarded every 8 hours. It goes back into your investment, gets compounded for the next 8 hours. So this tiny little reward amount doesn't look like a big difference between 0.57 and 0.68. But as you can see, 0.57 is 55,000%, and 0.68 is 166,000%. Right? So it's at the end of the year, it makes a big difference. And like many people will say, the APY is not a real number because that says you're going to get this rate of return for 365 days. And we know that these numbers change so fast. In cryptocurrency, a month is like 6 months, right? You know what I mean? And these reward rates change almost by the hour. So to kind of forecast out 365 days, especially if they give a really high reward for a short period of time, and then show on the front page we're paying 60 million % APY. Well, yeah, that's because for 1 week you doubled your normal payout ratio to kind of get everybody hyped about it. And then as soon as you get a bunch of people in, they drop the APR back to a more reasonable level, and then the APY collapses, right? And everybody gets disappointed.
Right. But again, at the end of the day, it just, no matter what the APY is, whether it's low or whether it's high, I mean, it just kind of cancels out in the end because they're basically being airdropped to you for $0. They can only be sold, right? Mm-hmm. And that will just cause downward pressure, and the downward pressure it causes is going to be somewhat equal, depending on how deep the liquidity pools are. It's going to be somewhat equal to what you're getting them for. So,
and the only factor that you have to consider is the treasury that they have from all this money that's coming in. Are they doing something productive with it?
Right.
If they're making good returns with their treasury, then it's not like the money that comes in just gets turned around and paid back out. That would be true if it was just going into stable coins and then being held for a little while and then paid out as rewards. But if, like we talked about earlier in this episode, if they have a treasury that's inventive and they're coming up with ways to take the treasury and invest it in areas that are also getting a good return, well, then there should be a net benefit to being an investor. But you're right, if they're just coming into stable coins, turning around and paying it right back out to everybody and inflating the number of coins by minting them every time somebody buys a bond, then the net effect is your APY is a net nothing, right? Like the value of your coin drops is probably very equivalent to the APY you're getting paid, right? So.
Right. And, one thing I think that we're absolutely going to see this year that at least I've not heard of yet is actually have like stablecoin dividends from these things where you don't get, there'll be a special event or something where they will be unannounced, right? You'll be staking for a while. And then, they said, okay, hey, we invested our treasury into this asset. It just grew a lot in the last few weeks. We're going to sell some of it for stable coins. We're going to airdrop those to people. We're not even going to give you our own token because we don't want it to cause the downward pressure on the price of tokens. So we're just going to flat out just give everybody stable coins. Now it'd have to be on a chain with very low gas fees, right? Mm-hmm. For that to work very well. But I think we're going to see it.
Yeah, I already know one that's going to be doing it.
Oh, really?
Templar.
Which one?
Templar.
Oh, are they?
I told you that before. So what happens is Templar, when you stake their TEM coin, you get a sword. It's a placeholder. They're going to let you bring that to Huckleberry and put it in a liquidity pool with the Fin token, which is Huckleberry's own token.
Right.
And they're going to pay you out in MIM.
Oh, I see.
So your rewards for that APY is going to be in MIM. Your rewards for your original stake TEM will be in more TEM, right? But at least the second half of that equation is paying you in MIM. So if for whatever reason you had household expenses or something where you just want to collect your rewards and spend it, at least it's in a stable coin, which is nice. So I know what you're saying. You're talking about maybe even the first round, the staking the TEM to get MIM. Is that what you're hoping to see?
Right. Yeah. Like actually just see this straight up, just, because if you provide liquidity like that in your example, there's also the risk of a permanent loss on the LP pool. So it'd have to make up for that. Yeah. But whereas what I think is going to happen is we're going to see real dividends, basically like cash dividends, I think. And I think that some of them might be on a schedule. Some of them might be a surprise. But it's and some of them might only go to like a top percentage of stakers, right? Because it might not be economical to do it. Like you might have to have like a minimum stake to do it. Mm-hmm. It's gonna happen, and it's gonna be cool, and it's gonna reinvigorate some of these projects. And I'm keeping my eyes out for some that have the potential to do that. So I think it's gonna be interesting. Yeah.
I've talked to a few projects that they've already said that's in the works. I think they'll all start to, when one does something and it's very successful, they'll all start to copy each other. But I've already seen a project that's told me that their plan is that when you stake for a certain period of time, you're then going to get like a stable coin payout to you being a diamond member or whatever, because you've proven you've staked for past 3 months or something. So there's going to be some extra incentive to stay longer, which is what they need, because there's far too much of this jumping to whichever one's the highest APY, or even doing the 5-day bond repurchase game where you sell all your coins in whatever Rebase DAO, go back to the MIM or the BUSD or whatever bond they're selling, buy the bond again, do the 5-day plus the half the staking ROI. And when you add those two ROIs together, you make more money than just staking alone, which is kind of a flaw in the system, because then there's always that selling pressure, because people are always selling the coin for the DAO every 5 days, or liquidating it back to a stable coin to buy a bond again, and then do the whole process every 5 days.
Yeah,
right? So
exactly. Lots and lots of downward pressure from bonding. That's why, so people refer to these things as Ponzi games, and I really don't think that they are. There's some element of like, getting in sooner, you might benefit more, right? But in my experience with these, I've done better waiting it out and waiting for like the crashes and being a real value investor and buy the good deals. I've definitely done better with that, because so people are not patient in crypto, and they, if they're not making money, they get out quick and they just move on to the next thing, right? Exactly. And so if there are these coins that have more sellers than buyers, more losers than winners, right? Well, then there's still some potential future winnings there left on the table still. And I think some of these ones that are trading well below their valuation ratios, again, as long as they're not Rugpulls, it's tough to lose money. They can go down further for sure. But I think that the amount they can go down percentage-wise is less than a lot of the other ones.
Right. Now, one of the ones we wanted to talk about tonight for sure is we want to talk about TIME Wonderland.
Yeah.
Because it's a very popular DAO. It's been around for one of the longest on your list here, days since, so 125
days.
Yeah, so it's been around long enough to kind of proven itself. It's KYC'd because the lead founder, Daniel Sesta, yeah. He's known, he's on YouTube, everybody knows what he looks like, he's very public. So that's kind of a confidence building thing, that the guy who's kind of the face of the company is known. Most of these, nobody knows who the developers are. They've got the whole, Sushi Swap, the Popsicle. They've got a bunch of different sub things. And I was watching one of their videos about how they've got these 4 sort of sub areas that they use one, they need the other one to make a profit. So one side of their company, so to speak, if you call it a company, uses the other part. And then that part uses the third part, that part uses the fourth part. So they're kind of a circle where they're making, and of course, there's a little bit of fee they earn on each one of those steps, right? So, you know what I mean? Their customers are using different components of their sub company. And I think that's a unique feature of this Rebase versus most of the other ones.
Absolutely. I don't think that they totally have Sushi Swap, right? I think that there's things are moving in that direction. Yeah. I don't know if it's quite like, they could say that they own enough of like the outstanding tokens or whatever to say it's kind of like mostly theirs, or they have enough governance to like very, very much influence it. I think it might get there. I think that might be an intention that they have.
Yeah.
And it would absolutely be an amazing tool in their arsenal for everything else that they have doing. Like they could, I think Sushi Swap has like a lending borrowing platform within it. They could just tear that down and replace it with Abracadabra.money, right? So there's a lot of things that they could do well with Sushi Swap. So that's still to be determined. But there's absolutely what do you call it? Efficiencies like with Abracadabra.money and with TIME Wonderland and just them being a huge part of this ecosystem, and with what's his name, Andre, I'm going to butcher it. I don't know how to pronounce his last name, whether it's Cronje or something like that. But he's massive developer. Basically, is one of the big players in the Phantom ecosystem, and he's kind of on that team as well. So I think we're going to see. I think this might be a big Phantom year too. And we're kind of seeing the murmurings right now with it, and a lot more cross-chain going over the DeFi and Phantom, the options they have right now, things like, they have Spooky Swap and Spirit Swap and Liquid Driver and Beethoven and everything. Like they have some really, really interesting, cool plays there, low gas fees. So I think we're going to see a lot of neat stuff come out of Phantom soon. But
well, if you look at the last 2 weeks, Phantom on the chart is just just gone crazy. Now, obviously, today's pullback probably maybe made it hurt a lot more than the average one. Because when things go up over 2 weeks, like exponentially compared to everybody else, then they still Phantom is unfazed by the news today. Yeah. And that's the 1 week. So. I took on TradingView, I brought it back over, I think 2 or 2.5 weeks, and it's just been continually outperforming the rest of the market. So I think a lot of people have already kind of, the news is out. Phantom's growing in leaps and bounds, is becoming quite the hub of activity, right? So
and if you think about it, like I know Avalanche has like the A and B chains, right? So I know that Avalanche is like a different play for sure. But if you think about the Avalanche C chain and Phantom and what they offer, their EVM chains, somewhat low gas fees, like in terms of like, they both use proof of stake and what's it called? DAG, right? DAG system, TAG. So consensus. And so they're so similar, but Avalanche's market cap, right, is like triple what Phantom's is, right? So Phantom's inflation from like the vesting schedules from like the VC is much lower than Avalanche's too. So there's less downward pressure from VCs and Phantom over time than there is in Avalanche. So we do factor those two things in there. I see definitely a lot of potential in Phantom, not financial advice.
Right, exactly. Cool. Yeah. So is there any other ones on your list of 15 that you want to point out? Anything new?
Well, I do want to talk a little bit more about Wonderland, right? Because about some of the advantages there. That is the one that I am with the pullback that's happened, right? And when we see
it's like 2,500 right now, or was when I started recording.
So in the last week, it's down 25%, about 25.80 right now. That's come down quite a lot, and I always knew that this one had that ability to do that because it's traded so its valuation ratio has been so much higher than the rest of them.
Yeah, a little rich.
Yeah, exactly. But the thing is that I don't think anyone's going to be able to grow their maybe Squid, maybe Ohm, maybe Redacted or Butterfly, whatever you want to call it. They'll do well with their treasuries too. But the advantages and the synergies that Wonderland has with the rest of the other applications like Abracadabra.money are massive, right? Because if you think about what is like the most lucrative play in DeFi right now that everyone wants to be a part of is like the degen box on Abracadabra.money, right? Where it's that UST looping. Do you know about this? It's something you can use UST as collateral, right? The Terra Luna stable coin. So
you borrow and reinvest it and borrow. It's like a loop that way.
Exactly. Yeah. So actually, we'll just load up I have Wonderland's treasury here. So that's right here. There's leverage positions, right? So they have $356 million of UST leverage that they're making. That goes through Anchor Protocol, which as of right now is around 90% APR. They loop it a bunch of times with the leverage, right? So as long as UST doesn't drastically lose its peg, right, which would be horrible, then you make like almost like 100% APR on this. That's relatively safe. Again, black swan events, protocol bugs could always happen, could always wipe things out, but that is like everyone's favorite safe DeFi play right now. But they're the ones who make it, right? It's on Abracadabra. It is them. So they can get first dibs on it because they know when they're going to do it, right? And they have this huge treasury. So they have that. And another thing that they did really recently, I don't know if you know this, right? They have a lot of spell here, right? So they have like 20 million or so, and its spells come down a lot today. About 20 million spell staked right now, and they did an over-the-counter trade with I don't know if it was Danny or someone else. Where they got spell like at a 50% discount to what it was going for in the market, right? So that by doing that OTC trade, like that was massive value that they extracted from having spell on the balance sheets here, and they could do it again in the future. And the future prospects of spell, if they do what they want to do with all the cross-chain DeFi stuff, the potential of that over time. And now that there's a lot of spell emissions right now. Based on what they're doing in Curve and all these cross-chain things. But that is going to keep slowing down. More and more spell will be burned. More and more will be distributed to the stakers from the protocol fees. And eventually it'll all be emitted, right? And so then there'll be no more inflation. And so, that's a very, very volatile one in the short term, right? In the next probably year or two or so. Long term, if they succeed with MIM being like the main decentralized currency cross-chain, then this is going to be an absolute massive boon to Wonderland money too. So those two things right there, between like being able to do these OTC trades for these great tokens and getting kind of that first mover advantage into the degen box strategy and whatever they're planning on Phantom, which I know is going to be exciting. I don't think it's been public
they've
yet.
Been hinting at it, eh?
Right.
Yeah.
Like. It is so challenging to bet against Wonderland here, and their treasury is so fun, right? I mean, like, I feel like I just want to just copy this portfolio. So big shout out to I think his name is Sifu, who manages their treasury.
Yeah.
They have Convex, they have Ethereum. Like, I love that. I actually like that they got rid of Avalanche tokens because when you look at what would an AVAX token be worth? Why should it be worth something? When you compare it to things like Bitcoin and Ethereum, which are so much more stable, Ethereum is going to be very deflationary after the merge. Why would you invest to have AVAX on your balance sheet when you could have Ethereum or Bitcoin, in my opinion?
Right.
So, in a lot of these other DeFi strategies they have here, right? Like, I love this one that they have the Popsicle Finance Pool for Bitcoin and Ethereum. That's awesome. Like, I want to do that on my own portfolio.
Yeah.
And of course, all the Convex and Curve that helps them with helping sway the rewards for the MIM pools and such in Curve. So it's just so efficient how everything works together.
And that's what I was saying earlier about Wonderland. What I like is that they've got so many avenues where they're making their treasury work for them to make a profit, that it makes me much more confident that even though they're not paying nosebleed APYs right now, it's still very respectable. Even if it cut in half, it would be very respectable. But they give me more confidence when you see what they're doing with their treasury, that they can maintain it for a long period, as opposed to some of these other kind of like one-trick ponies where they take a treasury and you're not 100% sure what they're doing with it, and then they pay out crazy APYs. I'm like, man, it's just a matter of time, especially in a bear market when there isn't the inflow of new money coming in, that they're gonna the cold reality is gonna hit them, that they can't afford to pay anywhere close to what they're paying now. And the people who are the DeFi degens that chase the highest APY will run for the hills the minute they start hinting they're going to lower their APYs, right? So,
right. I mean, again, APYs cancel out over time. The big thing that's going on here is I think what I heard today, that they're actually might be totally freezing minting and bonding. Like they might just completely halt it. That their treasury is big enough. Yeah. They don't need the inflation from the minting anymore.
You're talking about TIME, right?
TIME, Wonderland. Yeah.
Well, their bonds have already never had great discounts. They've never super motivated people to buy bonds, because a lot of times it's like 3%.
Super inflationary.
3% discount. It's almost not even worth, compared to other rebase DAOs, it's almost not worth even talking about 3%, right? So.
Right. Once your treasury is bootstrapped, right? I mean, like, you're just going to cause, right? You're just going to cause more sell pressure. Of course, you're going to increase the balance sheets, but at some
what
point,
cost? At what cost? Right. You're increasing the balance sheet, but you're giving some of these DAOs, giving 25% discount on their bonds. Okay, you added money to the treasury, great, but the person who got into the treasury got in at a 25% discount on the coin. So you kind of like, well, does that really benefit everybody else who's already staked in the thing? Probably not, right? And that's why whenever I talk to any developers, I always say, stop super discounting your bonds, because that just hurts everybody who's already staking, right? So
The big thing with the Rebase tokens is like the bonding is a great way to build a treasury for sure in a short amount of time. But once you have a solid treasury built, then it's just going to cause more inflation. And once things have somewhat stabilized in the token price, you don't really need to do it anymore. And you just be smart with the treasury. Yeah. And then, reward the people who are staking and such. I think some of these things might even just cut their APY completely. They might just say, you know what, we don't need to pay these emissions anymore. Our treasury is stable. We're not going to dilute ourselves anymore. We're going to invest our treasury. We're just going to be a hedge fund from now on.
And then pay a dividend or something.
And then maybe pay a dividend, exactly, something like that. But I think we're going to see that happen, and that's nothing TIME Wonderland said they're doing, is they're like, you know what, don't even think about the TIME token anymore. Think about the wrapped memo, or wonderful memories token, right? Think about that one, because that includes all the rebases compounded in it automatically. Like that token will go up over time. Time will go down over time, right? So when these things are not staked, they will always go down. All of these things are going to lose 90% unstaked. When they are staked, depending on how well they do, if they invest in good things, they will go up over time. So, and that's how you need to wrap these things to be sufficiently cross-chain too. So I think we're going to, and there's another juicy tidbit that was dropped today about Wonderland, is that there's a potential for a listing on a centralized exchange with WMMO, which would be massive. And I think that can only really happen if they're sufficiently decentralized, which they're moving towards as well. That would be so massive if someone because this stuff's a pain in the neck, right? To go into MetaMask, and some people aren't interested and maintain their own private keys and everything. If a reputable exchange sells WMMO and has like all the advertising potential, it could be massive. And they already talked about having these relationships, potentially advertising Wonderland at music festivals in the future and such. So I know the ratio is high on this one, but I think the potential is, I mean, if Squid wasn't trading at such a huge discount right now, I would say they would be number one. I would, but on my list for sure.
Yeah, for sure.
So, I know we've talked a lot about them, but I think there was good reason to.
Especially with the price getting really whacked in the last, in the last week, I'd say. Last week, the coin's kind of gotten a severe haircut. It wasn't that long ago, really, in the grand scheme of things. In crypto world, it's a long time ago, but it was not that long ago. This was $10,000 a coin. Now it's 2,500 and change a coin. So it's gone down 75%.
Yeah, but the thing is, if they were emitting, the thing that we don't want to look at it.
No, I know you're saying that
if
you're getting the 10% every 5-day rate of return, you didn't really lose 75%. I'm just saying, you know what I mean? Like, there was a time, when you look at the chart, it's not like they all slope down constantly. There was a time where these things were popular and they were going up. Even though they were minting new coins and giving out emissions from the rewards, the coin's value was going up because people were FOMOing in. And that's what can happen in a bull market. If people see great returns and everybody's saying, oh, I made all this money on Time or whichever one, and their buddy goes, oh, I want to get in, people just start FOMOing in. They don't even care what the price is. They just buy, right? And that's where these coins can go up while they're still minting new coins. So, but if we have a bear market coming, which I was hoping it was further into 2022, but if we have a bear market coming sooner rather than later, then these can take a pretty substantial haircut, because a lot of them are way above their risk-free backing price. So and Wonderland, they're investing in a lot of assets that absolutely can go down, right? Convex curve spell, like in a bear market, those things are probably not going to do well. No. And even the safe ones like Bitcoin and Ethereum, if that's on the balance sheet too in a bear market, they could go down 70%, right? So everything goes down.
But the UST looping, the Anchor Protocol one, like that should be pretty safe. So if you can get a somewhat safe 100% APY from that, that could help balance out during those bear markets. And these things will all come back. I really don't think any of these things like convex curve spell, I don't think they're going to go away like anytime soon at all. Right. There could be a massive innovation in DeFi, or maybe some regulation that stirs up something, but they'll probably be around for a while. And whatever, I know we're gonna see some volatility here this year, but it should be okay.
Yeah. Cool. So any last thoughts on your list? Anyone else that you want to talk about?
Yeah, so the big thing I wanted to say was Phantom, right? So we talked a lot about that one last week, and that one shot up like crazy, right? That one has massive performance in the last week or so. I always said that was a really, really strong one, because cheap value, great treasury strategy, innovative team, good marketing. Like they had the whole picture to me. And I thought they were trading so cheap. So it was good to see that they got what they deserved, and they got a nice pump from that. That did drop them down on my list a little bit, because now that their valuation is not as good anymore, their valuation ratio. But I still think they're very solid, right? They're in my top 8 or so. So I still think they're really, really good. One that I was so close to getting yesterday was Umami, if I'm saying that right. It used to be 02 Ohm and Arbitrum. And that one, where is that one? Umami right here. It's coming down a little bit here, but you see in the last 24 hours, it's popped up a lot. We sort it by that, right? It's actually the best performer in the last 24 hours. Earlier today, this was up like 20 or 30%. So yesterday, I saw it and I was like, I need to, because it was effectively down like 50% in a week. And I always thought it was good. I think their treasury is great. They have these vesting options. They're basically one of the only plays in Arbitrum, right? So I was just about to ape into them and get some, and then I did some other things. I went to sleep, woke up today, and then it pumped up like 30%. So I was like, maybe I'll wait a little bit longer.
I've never even been on Arbitrum, so I wouldn't.
Really?
So
it's a pain because the gas fees are still annoying on it, right? It's not as bad as Ethereum, but it's definitely worse than almost any of those other ones.
It's not a chain you often hear about. So that's when I saw that one. I'm like, Umami on Arbitrum. I'm like, don't know if that one's going to make it into my list. I did take your Phantom one, though. Like when I was reading your articles before our last episode, I looked up the Phantom specs and I was like, I like it. So I got in.
Tome,
I got in, but I wish I'd got in with a lot more. I mean, if we knew, hindsight being 2020,
if we knew it was going to go up 150% a week,
especially when everything else was going down, right? So I'm glad I got in. So and I more than doubled my money, tripled my money probably. So
riding that one in 1,000,000% APY for a while, and then the actual price of it going up, doubling in a week. That one that's a good one. So we'll see how much it can maintain. My current rankings, again, based on value, risk, innovation potential, treasury strategy, and people can look at my article if they want to.
I'll put your links in the description down below. It'll have his Twitter account listed, the actual link, and that'll also take you to his Medium area where you can read all his articles. And like I said, this last one is kind of like what he sees in 2022. It's a really good article, so definitely check that out. All right. Well, unless there's last thoughts?
Yeah, I don't think so. This was fun. I enjoyed doing this. Thanks for having me.
Great.
I hope this is beneficial for your viewers.
I'm sure it is. Yeah, definitely the area to go. We should probably do this once a week again. Well, every time you have something new and exciting to talk about, we'll do another episode and update your list. Like I said, I've already seen your list moved around a lot. Like I think things move even within a week, right? So
yep, exactly. I always reassess things and looking at what's new in the Discords and you know what's new in their treasuries, and so some
new ones on your list and some that were on your list last time that are gone, but we'll leave that up to other people to figure out which is which. But well, I appreciate your time, and it's always fun talking, and we'll do this again next week.
Sounds good.
Okay, talk to you later. Bye. Well, hopefully you found that informative. If so, show the channel some love by giving it a thumbs up. We're going to have Bludex on a more regular basis, so you can look forward to that. So subscribe to the channel so that you don't miss any of those future episodes. Until next time, this is Craig signing off, wishing you happiness, health, and wealth. Ciao for now.